Yes, sir. It's your boy B Hayes. We back with another one, guys. Before we get into it, let's give this video a thumbs up. If you're new around here, you already know what to do. So AMC, we sitting at $11.80 at the time of this recording, guys. We came down, broke that massive key level that I was telling you guys about on yesterday at $12.05. We broke that, giving us a clear indication that AMC could fall a bit more, guys. It's looking for that floor, looking for that bottom where we come in and bounce from. And I believe that could possibly be around the starting point, that $9, $10, maybe even $8 range, guys. So the best part about this is the last fall, guys. This is the last free fall for AMC, and there's nowhere else for it to go. We got it caved in, it's boxed in. We got massive amount of buyers waiting to accumulate even more, and they're accumulating as it's coming down now, guys. And we seen just yesterday how earnings, we did get a slight reaction to the upside, which was very short-lived, up 4% in the after hours, while the rest of the overall traditional stock market was still trending down. So AMC was trying to come up out of that hellhole and get back into that mindset of its own. Because if we flash and go all the way back, we know from the get-go, AMC and meme stocks was on a different frequency than the overall stock market. The overall stock market would be pulling back, doing bad. Meme stocks would be going up, going crazy. The overall stock market would be going up while meme stocks would be pulling back. But now everything is moving simultaneously in the same direction, meaning every actor, every sector, every inch of the market is moving in the same motion. If the Feds want the market down, everything's coming down. Meme stocks, regular stocks, every area, every sector. If they want to go up, everything will be going up simultaneously. But AMC almost got from up under this little beam they've been having us under for quite a while, and we almost got back into our own rhythm. And we all know AMC meme stocks should be soaring during these times. This is what meme stocks are made for, during market conditions that we experiencing now, while everybody is scared, fear, inflation is rising, interest rates hiking, all this stuff is going on while meme stocks is still being hammered down. And these stocks is not based on the same fundamental aspects as these traditional stocks. And to put the icing on the cake, we don't even need the fundamental aspects to add up for us to go to where we're trying to go. But to put the icing on the cake, our fundamental aspects is far better than the regular traditional stock market stocks. So with that being said, with all this scrutiny, all this crazy stuff going on, we winning on two sides of the stick. We already don't need the fundamental aspects for us to go up in price action. We the people, we doing that. But to put the icing on the cake, we got the other factors too. If you still trying to hold us down, manipulators, cheaters, we got everything. Everything's adding up. All the criteria adding up. We got best of both worlds, and still is getting punished, guys. So, like I say, time will tell. The bottom is here. We is at that last floor. It ain't too much more they can do. We got them in a chokehold, guys. So our institutions preparing to close short positions in AMC. Retail investors have been waiting for big institutions to close their short positions in AMC for over a year now. Many short positions in AMC Entertainment stocks remained open after January's and May's run-up last year. This year, bear market has dropped stock prices back to all-time lows. Will this provide institutions with incentive to close short positions in AMC now? AMC drops to all-time lows again. The entire market is on a free fall. AMC Entertainment stock managed to fall below $13 on Monday despite heavy buying volume. The off-exchange trading for AMC is currently around 62.2%, according to Fintel, and shorts have borrowed an additional 1 million shares to short the stock, according to Stock O Tracker. So guys, we know massive demand, massive buying pressure came in yesterday, and we still is getting manipulated. But like I told you guys, what it's going to have to take for us to blow past this manipulation in these short sellers and institutions, that's going to require many retail investors, millions coming together collectively, buying up the stock. And when they spend all this money, millions of individuals, it's going to outpace the manipulation. So much pressure, it ain't going to do nothing but explode once so much arouse up, guys. So you already know we waiting on that as well, for that crazy swing back to upside, because it will be shocking. The economy isn't helping much either. But further fueling the market stress, interest rates are rising. So it's costing them more to even short bet against AMC. Inflation is at an all-time high. And the U.S. is battling several issues outside of the country with Russia and Ukraine and at home. Today's economy has the entire market beat. And AMC Entertainment is no exception from the free fall despite the company's continuous progress. AMC has become a trading ground. If AMC stocks drop below $10 per share, then margin requirements will be raised to 30%. This is rather significant because it requires institutions shorting AMC stock to carry more collateral. They will have to have more, something putting up some type of asset to hold against those positions. Unfortunately, for the rest of the market, institutions will continue to create massive sell-offs just to keep up with these margin requirements. But it gets worse for them because the lower AMC drops, the more collateral will be required of them. Financial institutions are being stretched beyond their means, and it's not going to end well for them. We've already seen hedge funds fall, and we can expect this trend to continue. Like, guys, I know it's being rough. I know it's being crazy. But throughout all this, at least we, it don't cost us nothing to hold. It's costing them buttloads and buttloads and buttloads of money. They didn't by any means expect for retail investors to still be hovering around, hanging around, lurking around, waiting on this play to do what it's intended to do, besides them manipulating it and holding us back. So the investors, the retail investors are still here. They still around. They still wide awake. And they is not liking this by any means. It's costing them a fortune, guys. We done had Citadel lose part ownership of their company. Money was all in-house. That was all a family business. They didn't want to have no outsiders coming in. But with their money issues, with liquidity, with them having so much at stake, they had to accept some outsiders to have more liquidity to further help this situation. Also, we know guys like Melvin Capital. We done knocked them clean out the map. They shutting down their whole firm, guys, and starting over from scratch. And now they don't even want to manage the amount of money that they was managing previously because of fear of us. They now want to just manage around $5 to $6 million. Anytime they get over that barricade, they're going to return money back to clients. They don't want to, put themselves in that situation no more. We also got certain short sellers that's been shorting for over decades, 2, 3, 4 decades in the game. And they say we putting it down. We only going long now. We don't want to risk it. We scared, basically. We never seen nothing like this coming. We never thought we wouldn't be able to predict what's to happen, and retail investors can do, can make their own thing up. They didn't see anything like this coming, guys. So you already know, man, I'm holding it off to the end. And y'all already know. I love y'all. We out. God bless y'all. And we gone.